Hey, welcome back to The Dive. Today on the show, we have the CEO of Gatekeeper Systems, Doug Dyment. Doug's joining us today to give us an update on Gatekeeper Systems. He'll discuss the company's recent growth, new team members, some of the challenges they face as a Canadian small cap, as well as future expansion plans and the sentiment of investors in this environment. Hey, Doug, welcome back to The Dive. Thank you so much for joining us today.
Thanks. It's nice to be with you.
Okay, so Doug, Gatekeeper recently put out fiscal Q3 earnings, where revenue is up to $20 million for the first 3 quarters of 2023. What's driving the growth?
Well, the platform as a service business model that we introduced a few years ago has really been a catalyst for us as far as a growth driver. We're seeing revenue per bus increase and revenue per train increase. Our customers are really moving to more wireless networking requirements, and so needing to get access to live video on inside those buses and inside the trains for various reasons. It makes managing the video, managing the incidents easier. That's really been the driver. We've introduced new products as part of our platform as a service, and those new products really help to create 360-degree safety inside the bus and outside the buses. So consequently, what we end up with is more revenue per vehicle and per train. Another area of growth that we're just starting to see as wireless networks increase, or the request for wireless networks increase, is our hosted service. So Gatekeeper currently has approximately 47,000 of these mobile data collectors, and that's really the computer that's on the vehicles or the trains that collects the data out at the edge. And we loaded up all of those devices. That was an investment that we made many years ago, to knowing that wireless infrastructure was going to be coming eventually. And really the strategy was to, let's make sure that every one of those mobile data collectors that collects really the gold, being the data, let's make sure that we can eventually connect to those devices and get access to the data that we're collecting. That way we can start to layer on cloud-based application that really monetize the data. So in the case in point, what we do is we'll give away a free application that allows our customers to have basic management features. And really they're clipping video of an incident and they're sharing it out with the people that need to see it. Okay, so but if they want an enhanced feature set, such as live streaming and a few other features, that's where our cloud-based application comes in, our enterprise software. So when the market moves to wireless, like it is now, we're able to offer up some of those cloud-based applications at a cost per vehicle per month. And that is really driving us to more of a data company, right? So that's the goal here, is to become a large data company. And we're doing that really by getting our customers pregnant with these mobile data collectors and system solutions. And we're collecting that data, and we're in the process of now signing up for these subscription model business, which most people know as a software as a service. So we're seeing our top line grow quite nicely, and the bottom line, and really that's part in place because of the platform as a service business model that has more products attached to it, and with the capability for recurring revenue.
Now, you announced Jason Harris as the VP of Student Protector Programs. What can you tell us about the decision to bring Jason on?
Well, Jason has been an industry leader in both the K-12 side of things and the transit side of things. So he's got a kind of a unique skill set that is completely aligned with what Gatekeeper requirements are moving forward, in particular in the video enforcement side of the business. So Gatekeeper created a software application, cloud-based software application that really allows us to capture the incidents, the stop arm violations from our system out at the edge on school buses, and manage the entire ticketing process. So we've seen a significant growth in stop arm violations just this past year. On average, around the country, you would see that there'd be approximately 15 or 16 million of these stop arm violations that would happen each year. New numbers suggest that number of violations is over 40 million now. So the problem is not going away. And Gatekeeper, because we have an end-to-end solution where we use AI out at the bus to identify when there's a violation that's been created, and we've got a cloud-based application that can manage the entire ticketing cycle. It was time to really have a VP join the company to drive that business. And Florida just passed legislation that allows authorities to use video from a school bus video system as evidence to issue a citation. And Gatekeeper, we believe that we have approximately 40% of the buses, or 40% of the market in Florida. So we want to have a big focus on Florida in general, as well as some specific projects around the country that we're currently working on. So it was time to find a business leader that has the operational experience in our core markets, and Jason fit the bill. So we went ahead and and pulled the trigger on that. And in fact, we've got business meetings going on here in Abbotsford, British Columbia, where the entire team from Florida is coming in, and those meetings start tomorrow. So we're really looking forward to Jason coming on board and being an impactful player for Gatekeeper.
What's the challenge to onboarding new sales or establishing new markets?
Well, as far as onboarding new sales in our core markets, being in school bus and transit, some of the challenges that we have is that the really it can be a resource challenge, particularly in the transit market. We've got some nice accounts in transit, but as we grow, we're gonna need to put more resources, more sales resources in place in different geographic territories. That'll be, at the moment, that's one challenge on the transit side of things. A challenge on the school bus side can be a similar challenge. We have a lot more customers on the K-12 side of things, so what we're finding is that because the market is really moving more aggressively to wireless, managing those customers can be a challenge at times, right? So we are, in order to offset that, we've got programs in place that attract good people to our company, particularly on the IT side of things. So while there are some challenges in the business to onboarding new sales, we believe that our strategy and the fact that we touch our customers pretty much every day with our direct sales programs, we are identifying those challenges and reacting accordingly, right? And putting the pieces in place to offset them. As far as the second part of that question, challenges to bring on new markets, that can be a resource driven issue as well as a capital challenge. We've got to be careful that we don't stretch ourselves too thin in too many markets and really not really do anything well, right? So we're laser focused in children's safety and passenger safety. That's why the tagline "Protecting People in Transit" is our unique selling proposition. And by the way, we are bringing on new markets. Our platform as a service business model, it can actually work in any mobile environment, right? So for instance, we're testing on trash trucks at the moment with AI, and we've got some law enforcement projects. We've got some prisoner transport projects out there. We don't typically talk too much about those projects, but our platform as a service business model can work in any mobile environment. But when it comes to moving into those marketplaces where we really want to own the market, the challenge can be, what do we do? Where do we put our resources? Most of these projects, most of these markets do require specific types of feature sets that our engineering department needs to be involved in. And frankly, our engineering department is tasked with a number of areas, such as improving our automated lane infraction business, right? Even the stop arm camera business, there's going to be features that need to be built into our software application as we move forward to make sure that those applications are as strong as they can be, that we're on the forefront and leading and not falling behind. So bringing on any new markets, we have to be mindful of what resources we need and what we can afford, right? Without having to go out and do dilutive financings, that can potentially rip apart the share structure. So those are some of the challenges, but we believe that because of our touch point and our partnerships that we've got out there, that we are addressing them appropriately.
It's been a quiet summer in the Canadian junior markets. And I know we talked about funding a bit earlier, but I was just wondering, how is the company doing for funding? Is there any need to raise money anytime soon? And also, what's the conversation been like with investors that you're chatting with?
Well, I'll address the funding issue. I touched briefly on it there, as you said, but our goal is to get this company to the next level without doing any financing. And we've got good support. We've got good working capital levels. We're able to turn certain types of projects relatively quickly because of the infrastructure that we've got in place from an operations standpoint, which has quite frankly has taken us years to build. And so we're in a position from a cash perspective that we feel that our current structure that we've got in place will allow us to grow to that next level. Now, what is that next level going to be? Well, investors will find out, what the fiscal 2023 looks like. Likely sometime in late November or December is when we typically put out our year end. But it's been a robust year, right? And so we're excited about the growth of 2023, and further to that, there's lots of excitement in and around the growth for 2024 fiscal, just because of how the back order is building. So we're just about at the point where, what do we got here? A couple of weeks left in this fiscal. So I have a pretty good idea what the year end is going to look like, at least top line. And it's really important for investors to know that, Gatekeeper is not going to run out and do any kind of financing unless we absolutely need it in order to drive revenue that we can see on the horizon. Otherwise, we're just not going to affect our cap chart, that way, right? We want to make darn sure that we're fiscally responsible to our shareholders, and we're doing that by building a profitable company. So if we can drive a profitable company and turn cash, we can then reinvest that cash smartly in our organization, and without having to go back to the market. As far as part of your question there relating to investors that I talk to, I think that what I'm finding is that the market has really shifted, because let's face it, 2 years ago we were in a different environment, from a tech market perspective or microcap. The money really hasn't come back into the microcaps yet. That's not going to stay. That's not going to be that way forever. But what I'm finding is that any of the investors that are interested in microcaps, they're really looking at value plays now more so than they are, future promises of performance, right? So it's important that Gatekeeper takes the approach across our organization that we perform today, right? And we're driving, top line and bottom line growth using our existing cash resources, our lines of credit that we put in place. And quite frankly, Canadian banks can be difficult to deal with unless you've got a good business plan and a good operating structure and you're profitable. So our deal with our Canadian bank is we're prime plus 0.75%, which is a pretty darn solid rate for any micro cap. And Gatekeeper's in a good position. We're in a good position to step it up to that next level without doing any financing, unless there was an event where there was a sizable project that required us to step outside of our current infrastructure, but or there was multiple events, and our sales funnel is definitely filled with multiple events, right? There's no doubt about that. But are we going to land them? When are we going to land them? What does that look like? It's it's really hard to say, but I can tell you that if we're successful in some of the projects that we are currently working on in our sales funnel, then the revenue that we are at as it relates to Q3 is, in my opinion, will far surpass that, right? Moving forward, and that's the ultimate goal here. Our goal is to get to a much larger valuation for our shareholders, but we got to do it one step at a time and strategically. And we can't control the public markets, but what we can control is we can control our behavior pattern, or our behavior inside of our organization from an operating standpoint. And that behavior is being driven by profitability, right? And it just so happens that the top line is growing at a reasonable rate, and we want to continue that.
Okay, so Doug, before we let you go here, I know you said we'll wait on the numbers for the end of the year, for your fiscal end of the year, but is there anything else that investors should be watching out for? Any timelines or milestones?
Yeah, absolutely. I think investors should pay attention to what we have to say in our MD&A at the end of the year and at the end of the quarters relating to our recurring revenue. That is something that's starting to grow, and it's relatively small at the moment. But what is quite interesting is that the request for quotes now, 90% of them, 90% of our quotes going out have wireless requests. So when that starts to happen and the market starts to move to wireless, like I said earlier, that's where we can start to layer on our recurring revenue services. There's a number of things that are going on in our transit efforts. Southeast Pennsylvania Transit Authority is one of our bigger accounts and an important account. Alstom was just awarded. Alstom's the second largest train manufacturer in the world. They were just awarded a LRV contract. Gatekeeper is specified there. We're working with their engineers to design into their train architecture a system that our goal would be to then leverage their distribution system around the world. There's a significant opportunity there. There's another RFP that SEPTA's put out for another LRV project. Gatekeeper is spec'd in that as well. So investors should pay attention to the potential growth in the train market as well as the transit. And let's not forget about K-12. K-12 is, we want to start to grow that student protector program, and putting Jason Harris in charge and having somebody waking up every day specifically focused on driving that, that's important. And then this one more comment on the platform as a service business model. We're really seeing our revenue growing from $1,500 a bus all the way up to $8,000 a bus. And that has a significant growth when you look at the fact that a lot of these school buses are being replaced with electric, right? So there's a fresh palette of buses coming at a time when Gatekeeper already has a significant market share across North America. So I believe there's nice growth opportunity in our K-12 market. There's nice growth opportunity in the train business and the general transit business. And then we have this wonderful opportunity to scale on recurring revenue as we move forward. And if you look at our stock price, my opinion, we're significantly undervalued at the moment. It's a great buying opportunity.
Okay. Well, thank you so much for coming on and giving us the update there, Doug. There's always a lot going on at Gatekeeper, and we appreciate you keeping us in the loop. We'll see you next time.
All right. Okay. Thanks for your time.
To our viewers at home, thank you so much for tuning in today. If you enjoy small cap news and want to stay in the loop, be sure to hit that notification bell and subscribe below me there so you don't miss out on our next video. Bye.